Stratfor made a prediction: NIO stock is going to zero. The sooner you see it, the better. Maybe it's going to be the next car company for which it is going to be over. The Chinese battery electric vehicle maker NIO published its annual report revealing negative free cash flow of $2.2 billion after losing 1.6 in 2022. It has now lost $8.4 billion since 2016. However, the stock market says, no, we love NIO stock today. It's up 5%. If you look at this chart and you look at NIO specifically here, you might have an idea, at least partially, why that's happening. You can see that the chart is slightly up. It's still really low, but it's slightly up. But if you can look at this part here, you will see that it was also slightly up for a bit and then down. This is free cash flow history of pure EV makers. Bloomberg has a bullish article for Tesla. Tesla has built a charging business to be taken seriously. If you think about it, when we reach full self-driving and there are many robotaxis all over the place, the supercharging business is going to explode because many vehicles will be charged at superchargers then instead of at home or at work. Tesla bull Kallo out with a note this morning that Q2 deliveries likely to decline year over year. He's estimating 444,000 deliveries versus last year's 466. His price target remains $280 versus Wall Street consensus, which is now at 196. Toni Sacconaghi from Bernstein, though, says we see a robotaxi unveiling on August 8th as more aspirational, akin to Tesla Semi and Roadster announcements, and not likely to be Tesla's next model. We only expect competitors' offerings to get better over the next 3 years. BYD currently offers a $15,000 vehicle. However, it doesn't help that Toni never had a buy rating for Tesla. He only said sell or hold, but if you hold nothing, then yeah, you're not gonna benefit from the rally. This is crazy, but not really. Daniel's sister didn't want to buy a Tesla because of Elon and what he represents. But after looking into it more, she leased one and now says you would be crazy to buy anything else. We got deliveries from China for the last week. The number stands at 1,900. Last year's Q2 is in green, so substantially below last year's Q2. But compared to some of the previous quarter, we are doing fine. We did see earlier that Tesla is more focused on exports right now in China. However, this plus high Q1 ending inventories increases the risk of more price cuts in China over the next few weeks. There's a post on X that's getting a lot of attention. You can see 805,000 views. Remember the GigaPress that Tesla developed with a Chinese-owned company. Xiaomi is using similar gigacasting machines to make its new SU7 EVs. So the narrative is that China screwed Elon Musk. But Tesla doesn't own the company that makes the gigacastings. The entire auto industry has been moving to large single-piece castings for a while. So this is definitely not China screwing Tesla or Elon Musk. It's the entire auto industry moving in the right direction, and the Chinese in particular are really quick. I also expect other automakers to start using 48-volt architecture and steer-by-wire. It's just that Tesla does a lot of these things first. Also, do you remember that Tesla actually sent an instruction manual showing how to build a 48-volt vehicle? Tesla actually wants the industry to move towards that. One reason is it makes it much easier to work with other suppliers because all suppliers adapt to this new change.